Welcome back to Factful Finance, where we dig deep into the numbers and strategies that can shape your financial future. Today, we're tackling a topic that's become an everyday part of life for many: buy now, pay later services. You've probably seen them at checkout, heard about them in passing, or maybe even used them. But here's the big question: are they truly as convenient as they seem? Or are there hidden costs lurking behind that instant gratification? Let me take you on a journey through the unexpected price tag of buy now, pay later services, a financial trend that has skyrocketed in popularity, especially in the last few years. But as with anything that sounds too good to be true, there are a few things you need to know before jumping in. Before we dive in, a quick reminder: this content is for educational purposes only. We're here to empower you with knowledge, but always consult a certified financial professional for advice tailored to your situation. Now, let's start by breaking down what makes buy now, pay later (BNPL) services so tempting. At first glance, they seem like a no-brainer: no upfront payment, interest-free installments, and an easy way to get what you want when you want it. But when you dig a little deeper, you start to realize the real costs that come with it. First up, let's talk about late fees. Sure, those payments seem small and manageable, but if you miss a deadline, the fees can pile up quickly. For example, a single missed payment could cost you an additional $10 or more in late fees, depending on the provider. Now, imagine missing a few payments. Those fees can escalate fast, turning what seemed like a manageable expense into a financial headache. Then there's the credit impact. Many BNPL services don't report to credit bureaus, but here's the twist: if you miss payments or don't follow through with your installment plan, it can end up on your credit report anyway, negatively affecting your score. This can make it harder to secure loans, mortgages, or even get the best interest rates when you need them most. Let's not forget about the psychological effect. BNPL services tap into your ability to delay payment, but they also distort how you view the true cost of things. In a world where everything is split into bite-sized, easy-to-handle payments, it can be easy to forget just how much you're really spending. It's all too easy to fall into the trap of buy now, pay later without fully realizing that those small installments add up to a large amount over time. And here's a shocking statistic. According to the Consumer Financial Protection Bureau, CFPB, nearly 1 in 5 BNPL users report missing at least one payment. And when that happens, it's not just the late fees that hurt. It's also your ability to keep up with other financial obligations. Let's take a closer look at a real-world example. Meet Sarah. Sarah is a recent college grad and, like many, wanted a new laptop but didn't have the cash up front. She turned to a BNPL service that offered her the laptop in 4 easy installments. But life got in the way, and Sarah missed one of her payments. She was hit with a late fee, and before she knew it, her next payment was larger than expected. Sarah wasn't prepared for that, and it led to a cascade of missed payments and accumulating fees. What started as a $400 laptop soon ballooned into a $500 or more expense, and her credit score took a hit. Sarah learned the hard way that BNPL can quickly snowball into a financial burden if you're not careful. The truth is, while BNPL offers short-term convenience, the long-term consequences can be much greater. So how do you navigate these hidden costs? Here's a tip: always read the fine print before committing. Some BNPL services charge interest if you fail to pay off the full balance within the promotional period. Others have penalties that kick in after a certain number of missed payments. Understanding the terms up front can help you avoid these pitfalls. But there's more to the story. Let's talk about budgeting. A big problem with BNPL is that it encourages us to buy on impulse. You may be buying things you don't actually need or can't afford, thinking the payments will be manageable. But budgeting with BNPL can lead to an illusion of financial freedom, when in reality, you're simply deferring the pain to later. To take control of your finances, it's essential to factor in all of your payments, not just those you can see immediately. If you use BNPL, ensure it fits into your overall budget and plan accordingly to avoid accumulating debt. Remember, your financial security isn't just about managing your current obligations, but planning for your future ones as well. So what should you take away from today's deep dive into BNPL? First, While buy now, pay later can be useful in the right circumstances, it comes with hidden costs that could significantly impact your long-term financial health. From late fees to credit score hits, the convenience of BNPL comes with consequences. But by understanding those consequences, planning your payments, and keeping track of your budget, you can ensure that BNPL remains a tool, not a trap. What do you think? Have you ever used BNPL? How did it impact your finances? Drop a comment below. I'd love to hear your experience. If you found this breakdown useful, make sure to hit that like button and subscribe so you don't miss out on more insights to help you take control of your financial future. And if you're ready to go deeper into your financial journey, check out the next video on screen. You won't want to miss it.